Number one question on my channel: how can I get rid of my false signals? In this video, I want to introduce 4 indicators on TradingView that can help you on this. After watching this video, you can choose 1 or 2 of these indicators and increase your win rate and profit by removing many of your false signals. But you may ask, how? Is this really possible? The answer is yes. The majority of your false signals happen when the market is not trending. And unfortunately, 70% of the times the market is not trending. So if you know, when there is no trend in the market and the price is in a trading range, you can avoid many of your false signals that usually happen in non-trending phase of the market. You can identify non-trending market by the help of 2 methods: price action analysis and indicators. Price action is the most effective way, but indicators can also effectively help you on this. And in this video, I'm going to introduce 4 indicators for this purpose. Just make sure you watch this video until the end. And let's get started. Before I add the indicator, I want to ask you something. If you like my content, please support the channel by liking the video and subscribing to my channel if you haven't subscribed yet. All right, let's add the first indicator. Here we click on indicators and we search trend direction force index. We add this one trend direction force index version 2, which is written by someone named Cause Celebra, if I am pronouncing the name correctly. All right, this is the indicator, and as you can see, it's added here below the chart. In this indicator, we have a line that is oscillating above and below the center line, which is set at 0. As you can see above and below 0, we have 2 dashed lines which are set at 0.05 and minus 0.05. When the line is between these 2 levels, the color of the line is gray, and this shows that the market is flat. When the line goes above the 0.5 level, it shows that the price is out of the range. And it is advancing now, and the color of the line becomes green, as you can see. When the line is going far above the center line, this shows a strength in the upside momentum. And when it becomes horizontal or goes down, it shows weakness in the upside momentum. But as I said, when it goes up, it shows a strength in the upside momentum. Here, you can see that again, the line goes between the 2 levels and the color of the line became gray, telling us that the market is flat. But this time we got a downside break and the line became red. This shows that the price is out of the flat market and declining. When it goes down far below the center line, it shows a strength in the downside momentum. And when it goes up and getting close to 0, it shows weakness in the downside momentum. This indicator is suitable for short-term flat market, not trading ranges with large swings of the price. You can identify extended flat markets like this or small pullbacks like this when they happen during pullbacks. So if in your trading strategy you need to identify short-term flat markets, this indicator is a good choice for you. All right, now let me introduce the second indicator. Here we click on indicators, and we search from a channel, this one, which is written by Big Beluga. All right, this is the indicator, and as you can see, it's overlaid on the price chart. The indicator has added a channel to the chart, and this channel can adapt to market condition by considering volatility and momentum. When the price is inside the channel, the market is moving flat. And when the price is out of the channel, it tells us that the price is moving in that direction. If the price breaks above the channel and goes above the channel, it shows advancing of the price. And if the price goes below the channel, it shows decline of the price. This indicator is also suitable for short-term flat markets because with an increase of momentum, we have the price out of the channel. So this is not good for trading ranges with larger swings of the price. This indicator is also one of the best indicators for identifying flat markets and breakout of flat markets. So make sure you try it later. All right, now let me introduce the third indicator. Here we click on indicators and we search for the anion oscillator. This one, which is an editor specs indicator and written by Alex Grover. All right, this is the indicator, and as you can see, it's added here below the chart. In this indicator, we have 3 lines: orange, green, and red. When the orange line is above the other 2 lines, show a flat market. And when the green line is above the other 2 lines, it shows advancing of the price. And when the red line is above the other two lines, it shows decline of the price. This indicator is also suitable for short and flat markets, and it's a good indicator for trend following strategies. It helps you to stay out of the flat market when the orange line is above the other two lines. And then, to confirm your buy or sell, signals when the green line or red line crosses above the other two lines. All right, now let me introduce the last indicator. Here we click on Indicators, and we search ADX. This one is Average Directional Index, and this is one of the most famous and commonly used indicator among traders. As you can see, we have a line here, and this is the ADX line. When ADX line is below 20, it shows that the market is not trending. And when ADX line goes above 20, it shows that the market is trending. ADX is more suitable for identifying range markets with higher swings of the price or deeper pullbacks in trends. And with the help of this indicator, you can easily identify when a market is not trending and a price is moving in a trading range. This will help you to stay out of the market and avoid false signals that usually happen during a range market. Please pay attention that you can never remove all of your false signals. This is not possible with the help of the indicators that I explained. You can remove many of the false signals, but still you can get a few false signals during non-trending phase of the market, or even when the market is trending and there's a sudden reversal in the market. You may have false signals on the last movement of the price. With the help of price action analysis, volume analysis, and multiple time frame analysis, you can even remove more and more false signals, but it will never become zero, and you will encounter losing positions. There is no trading strategy or method with 100% guarantee signals, and losing positions are always part of the game. So you need to manage your risk properly, otherwise you will lose your trading account sooner or later. Without a proper risk management strategy, you cannot become a consistently profitable trader. All right, that's it. Thank you for watching. If you have any questions, feel free to ask and leave a comment for